Guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm currently monitoring. It does relate to the US dollar, which, as you can see, has been falling sharply in recent days. It's down another 0.8% today, or the dollar index is anyway. The dollar index being a trade-weighted basket of major dollar pairs. So actually it's mostly euro dollar. It's about 50% euro dollar that determines how the dollar index moves. But there's also a decent size weighting for cable, which is sterling against the US dollar, dollar yen, the dollar against the Chinese yuan as well. All of these are actually quite important as well for the DXY. But anyway, let's talk about the trade idea that I've been having. Well, actually, no, let's first talk about why the dollar has been falling so rapidly in recent days. It's inflation. Let me show you the calendar. Let's go back to last week. We had softer than expected US CPI figures last Thursday. You can see CPI month over month softer than expected, 0.4%. Year over year softer than expected, 7.7%. The core was also softer than expected. And in response to that, you've had markets building up their expectations that the Fed is going to slow the rate of interest rate hikes from here. And recent commentary that we've had this week from Fed members has, Fed's Waller over the weekend tried to push back against the aggressive market reaction, but he didn't push back against the idea of slower rate hikes. And then you had the Fed Vice President, Lael Brainard, talking about slower pace of rate hikes potentially as well. And then the cherry on the cake this morning has been producer price inflation, which was also softer than expected. You can see that headline month over month, 0.2% below the expected 0.4%. And core PPI was flat on the month against expectations for a 0.3% month over month price gain. And you also had negative revisions to last month's data. So the inflation picture in the US clearly improving, and this weighing on the dollar. You can see the DXY here, not quite in oversold territory yet, according to the RSI, and I think there's every chance that we could hit this 104 or just above 104 level of resistance in the coming days. But the trade idea that I'm thinking about is pretty much, if we do see the dollar bouncing back, perhaps, who knows what it's going to be? Perhaps there's some risk off kind of event that sort of surprises us in the coming weeks, or maybe something happens with the Fed, or something happens with US economic data, perhaps the labor market data, which has been robust, remains very robust. Perhaps the dollar comes back a little bit. Well, I like the idea of pretty much, we were in this uptrend for a very, very long time. Why is that arrow not working? We were in this uptrend for a very, very long time, and I think this recent break is a decisive break of that uptrend. So if we retest it again, if we get back to this 110 area, I think that could be a nice area to start adding to shorts. You've also got the 21-day moving average and the 50-day moving average around this area. If we are talking about a pivot from the Fed towards a slower pace of rate hikes, then an eventual pause, then eventually in 2023, we start talking about rate cuts again, start pricing them in. This dollar bull market could be over. I think it looks like it might already be over. So I sort of have pivoted to that view where any nice rallies in the dollar could be good selling opportunities. So yeah, that's what I'm thinking about at the moment, guys. Hope you all enjoyed the video, and I will see you all in the next one.